Hi, everyone. Welcome back to a brand new episode of Chasing the Bag with your hosts, Bade and Biyi.
Yes, it's been, I think, 6 months, and we've missed you guys. I know you missed us too. Hopefully you have, but we're back again for good. I think this is the third time we are saying that also. But who is keeping track?
Yeah, so I'd just like to say thank you to everyone who's checked on us over the past 6 months, asking where you guys have been. What have you guys been up to? When are you dropping the next episode? Sincere thank you and appreciations to every one of you. Now we are back again at it.
We're back. All right. So what's on the docket today?
We are just going straight into it.
Mm-hmm.
We are talking about Nigeria, Africa. We are talking about AI again. You know, it's been 6 months. A lot has happened in the world of AI.
Absolutely.
And we are starting with the Nigerian stock markets. And we will talk about that a bit. Talk about one of the Nigerian billionaires, maybe two of them, Otedola and Dangote,
See?
what they've been up to in the past 6 months.
Mm-hmm.
Then we'll go into the CBN monetary policy. What has changed? 2 days ago, there was the MPC meeting, and we're just going to cover that a bit. We're going to drop into the global oil crisis as well. So it's been 6 whole months. The last time we had an episode, we did not have anything like the Strait of Hormuz closure or the war between the US, Israel versus Iran and all the craziness that has been going on in the Middle East.
Yeah.
But we're going to talk about, of course, the AI companies, the valuation. Is it real? Are they going to return, the investments that has been made into them? And we're going to close up with situational awareness and what has happened, the crazy story that has happened in investing maybe in the last quarter. So, but did I capture everything?
Yeah, perfect. You got it. I think where you say we'll start from, let's just start at home with Nigeria. And I think I was very curious and also, I don't know if I would say impressed when Bloomberg carried that Nigerian Stock Exchange has been the best performing in the world out of like 192 companies that they track this year. And oh, okay, is that for real? What did you think about that when you saw it?
When I saw it, I mean, I can't remember how long ago this was, but it is impressive news. It gives confidence to investors. There are, I don't know, 150 countries in the world, or well, more than that, I think. I don't have the number off the top of my head, right? So, and to be ranked number one in terms of performance, in terms of returns to investors, one thing that it does is that it opens us up to even more investors coming into the markets to invest in Nigerian companies in the Nigerian markets. And we'll see how that cascades down to companies and the economy as a whole. The market is looking up. I think that's the general feeling about it. It is one of those things that you cannot hit on,
Absolutely. You just have to, like it. Of course, it's good news for Nigeria, and investors, the economy as a whole. What got me thinking, I was just thinking, what situation or what was the context that created such a rise in the stock market? And I was doing some research, and one thing that came out was the reforms that the government has actually been making in the past couple of months, last year to this year. I think that's one of the things that the CBN governor stated, and it made the currency, appreciate. Also, we had the global, macro issue on oil that, had made oil prices go higher, which meant that Nigeria, had more liquidity, which was crucial for the naira, and why the naira gained about 4% this year. So those were the things that I saw that okay, it makes sense. And of course, we'll still talk about Dangote. I think his IPO is also one of the reasons why we are seeing that a lot of foreign investors, their interest in Nigeria, picked up with the IPO lined up for September, I think. And it's great, like you said. It's not something we can hit on. We just need to ensure that this continues, the trend continues, and there's no issues for people in the country.
I mean, from my perspective, right, one thing that I see that bolsters investors' confidence is the way monetary policy, and this might be us already diving into maybe topic 3 already, like monetary policy and fiscal policy is handled by the nation and by states.
Yeah.
And of, all the ills that the Tinubu-led administration has done.
Yeah.
One thing that you cannot force them on is how they've handled monetary policy and fiscal policy. Yemi Cardoso, the governor of central bank, right? It was awarded a few months ago in London as, I think, the best governor of central bank or something along that line, right?
Yeah.
And just impressive to see it is activity like that or things like that that bolsters investors' confidence. So when you see that there is stability in the economy, when you see that the currency is being managed right,
Yeah.
of course, there's still the risk of societal risk, environmental risk, and political risk. When you think about insurgency and kidnapping and the insecurity in the land, of course, that risk is there. But I feel like maybe the fiscal policies and monetary policies that have been enacted by the administration has balanced that out slightly in a way that investors are still bullish on the country, even though, circumstances like, insecurity still persist.
Yeah. And the good thing, like to double down and touch more, is that the good thing is that also, aside from even foreign investors being interested, what is prevalent right now in the stock market is that a lot of Nigerian investors are heavily backing a lot of these companies. So we're still going to talk about, Dollars doubling down on First Bank, but we see that that also gives foreign investors more confidence because, rightly all the different, so South Korea was the highest. The South Korea's Kospi, which is their stock market, was the highest till June, I believe. And after that, because of the market failing to beat territory, you find that a lot of investors are getting nervous about AI stock valuations, and they are looking to other markets. So they are seeing currency stability in all backed revenues from the government and from the economy as a whole, which is something that is good for them when there's volatility macro wide. It's our investors investing heavily. It's a good sign. Also, we have all revenues that are coming in, and that's been good for the economy as well.
Yeah. Last note on the NGX or the Nigerian Stock Exchange in general. I think one thing that excites me now, seeing the performance, seeing the growth, seeing the excitement around it, is the opportunity for entrepreneurs to possibly exit by, listing on the NGX. I don't know if you've thought about that.
Yes, that's something that has been a lot of startup founders like the big boys in the industry. I think Flutterwave, they wanted to get Flutterwave to list on an NGX, but because they always try to compare the returns of listing in Nigeria to listing, let's say, on Nasdaq or the New York Stock Exchange, and they are not very confident in that. That's why the founders and also the foreign investors who have invested in them, if and as the economy is going up, there should be more appetite for our local companies to do that first, to invest in our own exchange before even thinking of listing another exchange if they have to. For example, in South Korea, we saw SKINX just recently went on the Nasdaq to get listed. That's after a lot of years of being on the cusp and doing well and being validated. So it's then the validation then pushes through beyond South Korea to
Yeah.
foreign investors who then want to be part of that, but on their own turf, on their own terms, with better regulatory regimes in line. For Nigerian startups, is a good thing. If you can start that, it will encourage more exits for founders, for early startup employees, even for local investors, and
Right.
it can be a good way for them to get rewarded for all the good work.
Yeah, I mean, just last note on that before we before we go on is that I know that there is a substantial amount of work that has been done in partnership with the LSE, so the London Stock Exchange, and the NGX. I think one thing that would bolster early investors in these startups, their confidence or that could persuade them into supporting listing on the NGX would be dual listing, right?
Yeah.
Having them list on both the NGX and also on the London Stock Exchange.
Yes.
I mean, one remarkable success story that has persisted for over a decade now is Seplat, right?
Yeah.
And how Seplat is dual listed on the Nigerian Stock Exchange, and now it has performed remarkably well, and also managing dual listing on the London Stock Exchange. So yeah.
Yeah, I agree. I agree. Sepal has done really well. And they created a good model. So it means you can get, why companies, IPO is just to get access to liquidity. So you can get investments in Naira from Nigerians and from people who are from foreign investors in their own localities for separate the British pound. So it allows you to also diversify your currency risk as a business if you're able to do both.
All right, on to our second point for today. Femi Otedola, and I think we're just going to take this together with Aliko Dangote's push to list the refinery on the stock exchange and pay dividend in US dollars, right? So Femi Otedola has made a remarkable and noteworthy move in his stake and holding in First HoldCo, the parent company of First Bank. He has divested last year, and I think we mentioned it on our first episode this year, like divested from the Geregu Energy Company PLC and making substantial investments, increasing his stake in First HoldCo. So what does that, portend for the industry?
Yeah.
And at the same time, Dangote too is making his push. Maybe we just chat about Otedola a bit first.
Yeah. So I think for Otedola, of course, Otedola is no stranger to Nigerian business climb, Afrobeat culture. We know him. He made his name is energy, fuel distribution, power, and he's gotten his hands on the holding company of First Bank, which is the oldest, most systemically important banks in Nigeria. And he built his stake now to about, I think, 25.8%, which makes the largest single shareholder. And the bank has been doing well after. I think it follows the trend of what he does. So he sees an asset class in a very entrenched industry that is very important to the economy. And he finds one company in that space that is undervalued or not doing as well as he expects it to be. He goes all into it. He has done it like time and time. It goes all into it, then turn it around and move on, cash out and move on. So everyone knows like that's his trademark.
It is almost like a personal PE firm, right? PE strategy.
Exactly.
Where you acquire stakes in this firm, you do kind of a takeover.
Yeah.
Then you put influx of cash to turn it around, or maybe debt financing, right? You turn it around, then you exit and you rinse and repeat.
Absolutely. And he's getting there to that takeover. I think that's what even made it like trendy. A lot of people are saying like under the Investment and Securities Act of Nigeria, a single shareholder crosses that 30% holding of a listed company, they are required to make a mandatory takeover offer, meaning they have to offer to buy out everyone else in the company. So he's at like 26-ish, and 30 is kind of the hard line. I don't know if you would go ahead to purchase, to then take over fully, or he would just be in the back running things with, the other members, the other holders, knowing that he has that opportunity to actually take over and change things there. So nobody is treating it as a passive move from him. He's always very active. He's like the black man in the US. So they come in, minority shareholders, they take over and they just make those changes and either sell off or transform the company and keep their stake in it for as long as, would make the returns that will, meet their appetites. So I think there's also the bigger backdrop. Nigerian banks are in the middle of a huge capital raise, and it matters because the CBN has told them to increase their share capital. So every bank has been out raising money, issuing new shares, and that recapitalization is reshuffling who owns what, and creates opening for someone like him with big purpose to build like that stake, which is what he's doing. So his timing is not random. He's always very precise. He's one of he acts like a Wall Street finance bro, the way he moves.
And also having the political influence to go with it, right?
Absolutely.
And just to go back to our first episode this year, it is and I can remember, I think the requirement was 500 billion, and then he made a call to either the president or the central bank. I think it was to the central bank. And in a statement, it was like, it's good that we are at 500 billion, but our threshold should be 1 trillion. Or what he asked was just like doubling the threshold or the
Yeah.
requirements for
Yeah.
recapitalization.
You do
And
that.
this is textbook billionaire move.
Yes.
It is a move that you can pull off,
Mhm.
and definitely a lot of your competitors are going to struggle to pull off. So it's a win. I like it. It is something to keep an eye on.
Yeah, absolutely. I agree. I like how he moves. To be honest, it's what any savvy businessman should do. Like I said, he moves like a finance bro. One would think he's heading a hedge fund. Not only that, it's just his own personal money that he's just using to make all these moves, which is
It's
very
incredible. It's incredible. Now to billionaire number one. He's the billionaire number one of Nigeria or of like Africa.
Mhm.
So lately, I mean, we've known he's been in the news for some time. He's been the boss for like the past year.
Yeah.
The desire to list the refinery
Yes. Yes.
on the stock exchange, pay dividends in dollars. It seems to be picking up now.
Absolutely.
Additionally, he is also making additional investments in East Africa. There's talks of a new refinery, maybe in Tanzania or Kenya. I don't know, but in East Africa, he's making strategic investments as well, expanding the Dangote empire. And interestingly, these days, I've watched a few of his interviews, and he makes sure to note their strategy. And maybe this is something that I'm going to do a video essay on sometime in the future, where he says, our strategy is, I think what he calls, is backward integration, right?
Yeah.
Basically, they look for a need in the market. And he says that's how he's always moved. For a need in the market, they start with importation. So importing these items.
Yeah.
That's the market, right? So sugar, rice, or whatever. I don't think he was ever in the petroleum importing business, but I don't know.
It was.
So it was like, we test the markets with this, then we backward integrate, and his dream now is to industrialize
Africa.
And I think that's his goal. It's pretty remarkable. And what do you think?
Yeah, like everyone, like, Dangote splits people in Nigeria. Some people are like, oh, he has benefited from, crony capitalism, government patronage, but also on that, and I understand arguments for that side, but I also see the hard work and the sheer input he has made in making that refinery to bring it into life. It is no small feat.
Yeah,
So I have to
absolutely.
give him his flowers with that regard. So I think very recently they raised in private placement the IPO about $2 billion.
Oversubscribed by 3x.
Yeah, like, it was wild. I'm like, yeah, those are the moves we need for Nigeria and for Africa. We need our big boys to invest, to put their money where their mouths are, to kind of grow the pie of the Nigerian economy so that there's more to share, there's more to go around. I applaud that. It's like it's a welcome development for Nigeria and Africa as a whole. If it keeps going this way, the goal of the entire family office of the Dangote Industries, I think I was watching his daughter interview some weeks back, and they want to get $100 billion in revenue, like maybe a couple of years. I'm like,
yeah,
$200 billion will help. Yeah, exactly. Will help. No matter what happens, it's not just going to be in his pocket. It's going to permeate the industry. They are going to be winners of that. Just like best entrepreneurs are the ones that create value for a large swath of people. And that's why Jeff Bezos always says he's proud of the work he did with Amazon. He created about, I think, $1 trillion worth of value, and he only took like some part of it. So no matter how, he gets vilified, Dangote, the impact of his economic activities are still going to be felt in the country.
Yeah. For me, the only risk that I see time and time again is that, he's a businessman.
Yeah.
The open market that we have allows for capitalism. And because he is in such a special situation where he's able to mobilize intense amounts of capital that I don't think any other billionaire in Africa is capable of.
Yes.
Or is any of them, to the best of my knowledge, dreaming as big as he is? I don't know. I think I might be wrong. I'm definitely wrong, right? Is that the risk of monopoly and driving out competition, and then being the sheriff in town, the only game in the market, right? So he's then able to dictate prices and extract
value.
extract value in a way that might be, I don't know, extractive or
Yeah, I agree.
on customers at the end of the day, which is why I am a big fan of another billionaire in Nigeria, Rabiu. Abdulsalam, Samad, right?
Yeah.
So, his own strategy, which it's kind of like the Burger King strategy, Burger King and McDonald's. Are you familiar with the strategy?
No.
It is the one where wherever McDonald's have their new store, Burger King just goes across the streets and their own store. Right? It's like, this is already proven. They've tested it out. So we're just going to copy it and just,
absolutely,
eat out of that foot traffic.
Yeah.
And there's something that has happened with Rabiu and Dangote. Time and time again, there was the sugar industry, the FMCG, right?
Yeah.
Then there was cement, BUA cement and Dangote cement. And now he's building his own refinery.
I heard that as well. Like that guy.
So that is tested and trusted. And you have someone who's gone ahead to blaze the trail. And you also have not the same power, but like you have enough power to like mobilize enough capital. You have enough clout, political power that you need to make moves like this. Why not? And if that's proven successful, might as well.
Yeah, I agree with you. And also to add to your point on like the free markets and there being some sort of monopolistic intent or outcome for Dangote and the other players that might go in, that it is the government's duty and the regulator's duty to ensure that consumer interests are upheld. Capitalists will do what capitalists do. They will try to extract value. That is what they do. So I wouldn't go out to blame him. Even in the West, you see all the big, the Magic 7, or what they call them now.
Yep.
Amazons, the hyperscalers, they've gotten so much value. It then behoves on the anti-corruption body or the anti-competition body to go there and try to cut where cut needs to be to ensure that consumers have best prices for the goods and services that these guys are providing. Else, everyone will go awry. So I don't blame them for doing what capitalists do.
I mean, I'm totally in line with that. The only caveat that I would add before we go on to the next point is that knowing the way Nigeria operates, knowing the way Africa operates, the regulatory bodies and their effectiveness in regulating markets or in possibly regulating billionaires. We know how money speaks in this part of the world much more louder than the West, right?
Yeah.
So, that is the only caveat. Like, are the regulators going to be able to put barriers or like reel a Dangote in or reel a Rabiu Abdulsamad in, right? So that is why I am kind of in support of like the petroleum importers, for example, right? If they want to compete with Dangote, let them.
Yes.
Right. So do not stop issuing licenses if they meet the mark, if they meet the technical criteria and they meet the specs for the requirement for fuel in Nigeria.
Yeah.
Issue and let them compete. Right. So, and if they're able to compete, you are able to keep a Dangote on his toes, sort of.
Yeah, I agree. It's what it is. It's like the law of efficient markets is that the market will determine the efficient price based on demand and supply. But if there are influences, and the government is the biggest influence any economy has, that enable one to the detriment of the other, you are going to have a situation where that the people that are enabled will have outsized power.
Yes, absolutely well put. So on to our third point, or third topic of the day, the CBN holds rates, right? So the Monetary Policy Committee of Nigeria, the central bank, met 2 days ago, August 4th, and they held the rates at 26.5%, despite inflation easing. in Nigeria.
Yeah.
Reaction to that?
So I watched the MPC meeting where the central bank governor was talking. It was like based on broader macro factors, internal factors, they are more confident in keeping it as is because it's very to move rates, either increase it or decrease it, requires the central bank of any economy of any government to be sure that they are doing that to either stop inflation or to encourage economic activity. So if
Yes.
they are not sure, it's just best to keep it as is. And that has been the case for Canada. That has been the case for the US, even though I think there are predictions that in September, the US, they're going to increase the interest rates. But you need to have incontrovertible evidence that if you don't do it, there's going to be economic activity that will either be restrained or, inflation will go so high that the average person won't be able to afford groceries. So I think is a good one if they don't have any real or large indicators for or against that. So stasis is always a good place to be. That's my own reaction.
Yeah.
What about yours?
I think they could have cut rates, but one thing that he pointed to was the war in the Middle East. And as we know, we might visit it a little bit later on. There's the impact that that war has had on the globe. You know, the demand for oil and the subsequent or the consequent rise in prices. The ripple effect was felt in Nigeria, with the rise of prices at the pump and rise on prices in goods and services. And, I guess it is an action that is still, like you said, meant to observe and keep watch of what is happening in the global scene and how that's, impacts Nigeria going forward. So
yeah. I think, what makes it is why a lot of people are talking about it, or why it's making around is because inflation eased under 16% in June. So everybody was expecting that, of course, if inflation has eased, it means that you have room to cut, to give businesses and borrowers some relief. But I think it's still a good decision anyway, as long as they are not impacting. So when they make a decision, plus or minus, they are going to definitely have impact on the economy immediately. That's what always happens. So it's more a trap to ensure that you have very clear indicators or a reason that will push you to make such a decision. And most central banks will just stay flat in such situations. I think another thing is that, Nigeria is an oil exporter, so high oil prices is good because it means that there will be more dollar into our reserves and more government revenue. But the problem is we export crude and we still import, even with Dangote and all of that, a huge amount of refined fuel. So an oil shock like what we're seeing in the world will raise the cost of bringing that in and to feed into transportation and food prices and pressures in naira. So I think that's where the central bank governor was, stuck. That's the dilemma he was in, and it was
you
just
have
like,
to consider, the committee has to consider.
to stay at stasis instead of making a decision that would change.
All right. So we already touched on the Nigeria economy, I think, and inflation, the CBN. And I think what we can now move on is to the global scene, right?
Yeah.
Oil, Strait of Hormuz.
Wild.
War.
The last couple of, in the macro scene, last couple of months have been wild. From wars being started to, back and forth from President Trump and Iran and Israel. It's just been dramatic. Everybody just like, how did this year start off on such a note? Trump and all the things that he's been doing. And he caught the market in a bind where before, when he makes a statement, we're going to have a deal with Iran, markets will rally. They not say, sorry, we've not had the deal. We're still working on it. Markets will go down. Now, the markets are moved.
Yeah. I think the market has become used to his whims and how irrational it is. It's like, he makes these statements and these proclamations almost. And it's like the amount of analysis that is done to back it, it's like so little that once they see the effect in the markets, and Trump is someone that, keeps a tight watch on the stock market. Once they see the effect in the global markets, they reverse everything.
Yeah.
It has also become clear. I think the war and the state that it is in, I think they underestimated how hard it will be to go to war with Iran, and how resilient it is. I don't think there is a winning that war from a US point of view, because even the objectives of the war are not the most clearly defined. Right. And, Iran has, this is the first time I'm hearing of the Strait of Hormuz, or I'd never heard of it this year.
Yeah.
Only to find out that it was such a critical choke point in the maritime industry. 20 to 30% of what global oil goes through that strait. And that is like a huge amount of oil, on the grand scheme of things.
Yeah. So I think one thing we can give a backdrop, because we know, like, we know the facts, we know the context. Maybe a backdrop will also help the audience. It's like, back in late February, this was about the last time we did.
Yep, the last episode was in late February.
Israel started attacking, the US and Israel started attacking Iran, and Iran's response was not just to fire back. They started going after the straits, which states like a stretch of water where about 1/5 of all of the world oil passes through it. So they held that as their leverage, and they were just holding all the ships and tankers that were trying to go through taking oil. So it became very difficult for the oil markets. A lot of people that were expecting, revenues from oil were not getting that. Insurance that, companies like Exxon and big IOCs put up were not interested in also backing up and helping their claims anymore, because it just went out of tone. Pretty much you could see it in the oil prices. Where I live right now in North America, it's been so eclectic. At some points it's 150 something, or $1.50. At some points it's $1.60. Yesterday I think it was $1.90, and it's just been changing as much. That you're like, why is there no stability? Because the US and Iran have not been able to come to some agreement to either stop the war. I think there was a ceasefire for 2 weeks, but that stopped again, and we're back at it seems. But I think most recently, Trump has been making some, statements that he's going to get to some agreement with them.
Another deal.
Let's hope that happens, and that opens up the strait to, keep pushing the world oil. That was good for Nigeria because we are exporters, so it meant good oil prices. All the companies that are trading oil out of Nigeria were benefiting from it. But larger macro, even in developed world, a lot of countries, I think it was Greece or Germany, that they were going to, because every country in the West has a stockpile of oil that it
reserves, right?
Yeah. And they were like, in I don't know, a few days, they were going to deplete that, and
it's their own reserves.
There will be no energy in Germany or Greece. I can't remember what country that was, and it was just wild. But this shows, I think, for us as chasing the bag, this shows the impact of what geopolitical conflicts can have
absolutely
on our, breakfast table, on our day-to-day life. So it's also good for, normal people, everyday people, to understand these things, so they can position themselves in a way to not to be negatively impacted by them. Of course, you all be negatively impacted, but you can, work your life.
You already mentioned this a little bit. You touched on it, right? So, like, Nigeria earns rent or revenue from the oil sales, right? Yeah. So people might be wondering, like, then why is the pump price in Nigeria also on the up and up, right? Yeah. It is because, this thing is driven by demand, right? It is driven by demand, and, it's a highest bidder kind of market. Like you also said, we do not produce enough to cater for the entire country. Yes. And also, when oil prices go up, the cost of refining also goes up, because these companies that buy the oil, they have to pay more. So, and they have to transfer, that change, that delta in price to someone, so they transfer it to the consumers. So that is why Dangote had to adjust his own prices. That is why the importers have to adjust their own prices, because it's a global market, and everybody wants the available oil. So it is one of those things that happens.
I think another issue, another part that made it even more, that exacerbated it, is because I think I'm trying to remember, was this Saudi Arabia? No, the UAE. The UAE left OPEC like very recently, I think a couple of months back.
Yes.
Because of, they've been going back and forth conflicting with Saudi Arabia on it. Saudi Arabia is the big dog in the OPEC, which is the oil producing exporting countries. Yeah. So, and they're a cartel. And what a cartel is, they come together to determine the price of oil so that everyone can benefit equally, and, the market is not flooded with too much oil that reduces the price and nobody benefits. So OPEC's power is, waning because, a lot of their member states are leaving. So I think that's why we felt that shock even more, because I think if all of OPEC was still together in full force, they might have been able to manage it more effectively, especially with the revisit that they have.
Interesting take. So, still on the global scene, one of the topics that we've explored repeatedly over the past, year and a half, every episode that we've done, is AI. It's AI. So we're going to touch on it a little bit. The AI trade is still going on. Like the wars are still going on.
Yeah.
The last episode that we did, we had that reaction to Sam Altman and Dario
back and forth.
Yeah, the back and forth that they had, and it was crazy. Now these companies are ramping up to IPO.
Yes.
And the valuations are humongous. There is now more intense focus on usage now, because the fee or the subscription that these platforms had been charging was not sustainable. Basically, they were charging, I've heard an analyst say that it's like charging $1 for $100 worth of work, right? So, and they have to make returns on these investments by venture firms. The discourse now in the tech scene, in the investment scene, which has, kind of like, I don't know, there's like a Venn diagram where they've like intersected squarely now, is that, are these companies going to return on the investment that has been done by these venture capital firms, right?
Yeah.
And if they do succeed in getting listed, and everyone knows that this thing is not what it seems to be, it appears that it's going to be the retail investors, you and I, at the end, that are going to be left holding the short end of the stick. Yeah. So that is basically the highlight of something that has happened over the past couple of weeks.
Yeah.
Yeah.
The SpaceX IPO was kind of like a picture into the entire AI bubble and the AI wave, like I will call it, because SpaceX IPO'd, I think, a few weeks back, about, I don't know, 35.
I think they went to market at 130.
Yeah.
It rose to as high as 200 and something.
Absolutely. And they were like, how? And now I think they are back. They fell.
It has fallen below the IPO price to just over 100.
100 and something.
Yeah, 106 or something right now.
The scale of this thing is crazy. It's so bad that right now, AI-related companies in the US account for something like, I think, 80% of all gains in the US stock market. I was watching an interview with Dario, and he says, bubble is already set. You just need what will prick it. And you don't know where we'll go from there, because how will an entire industry make up 80% of all the gains? We then see where are the revenues coming from. I think Anthropic has been doing well with their revenues. SpaceX reported their first earnings as a public company, and that really impacted how people saw them, because of course the revenue was up 92%, which sounds amazing, but only Starlink makes money. So all the AI and AI, you set up AI infrastructure.
Big money losers.
Thing has come off from those bets. Investors are starting to ask the uncomfortable questions. All this AI spending, hundreds of billions of dollars on data centers and chips, had the profits to justify it. So you can tell that the sentiment is turning gradually, and it's just a matter of time. Just a matter of time before we see some serious correction in the market.
One thing that I'm looking at, so I'm keeping a keen eye on, is the way these companies have been passing money to each other.
Yes, secular economics.
Secular, so that they can report on their books that have some sort of revenue, some sort of this and that.
Yeah.
At the end of the day, seeing the way the SpaceX IPO played out and how it was allowed to join the NASDAQ in like record time.
Yeah, that
and
was
the
just...
kind of leeway that it was given, right? Like we mentioned earlier, the kind of power that billionaires wield. Cash does rule everything. And I think they will be able to find their way, force their way into getting listed. And these early investors are going to cash out. And I feel like a lot of like retail investors and institutional investors, people that invest in index funds might be, and this is maybe how the bubble breaks, right? Might be left holding the short end of the stick, where the valuation of these companies after they list, that are going to be listing at about $1 trillion valuation, just like deflates, and we then get to see what these companies are.
Yeah. I agree. Like that's retail is going to be the one holding the bag. It's just so sad that that's what's going to happen. But whenever it happens, that most probably that's going to be the case. And I think one thing that will also be helpful for our listeners is like, well, this is like a doom case. So what do they do? Because you know that AI is good and it can also be a bubble. So where?
I mean, personally, I'm not making any retail investments right now. I'm unable to.
Yeah.
But I mean, and this is not financial advice. I had an inkling that the SpaceX thing was always going to, but the thing is, you never know with these Elon companies, right? You might think, oh, this thing is going to go down and it goes up. I was like, this thing is like a crock of crap, right? So it has the valuation or like the stock price had shot up. Like if I had some money, maybe you short this thing. Please don't take this advice.
No go too much.
Maybe you short this thing, because I've also been hearing talks of Elon folding in all of his companies. And this is crazy. So folding in Tesla and SpaceX into a mega company and some sort of like mega valuation. I think at the start of it, or like when and if that is done, the valuation is going to be crazy. It's going to be up there. It's probably going to be the highest valued company in the world, maybe.
Yes, absolutely.
Right? But I feel like it's going to crater after that.
Yeah.
So maybe you short it.
Yeah.
And but whatever you do, don't do like the guy in our next topic.
Yeah, don't do like you. But yeah, just also give people more context, because shorting might not be, I only advise it for sophisticated investors. Is something I always do, is especially if you watch a lot of all these drug trafficking movies and the DA try to capture them and all of that, they will say follow the money. And you can do the same for this wave. So you check where the money is actually going. And I think a lot of the money is going into energy and maybe metal street. So you look at all these companies, they are spending billions of dollars on infrastructure, on critical minerals, on powering data centers, because these models run on massive amounts of electricity. So the smart money is moving, in my opinion, from AI applications to the physical stuff underneath them. So the picks and shovels, like people will say. So that's something that, you can think about and maybe do a lot of research on before you make any decisions. And yeah, that's my opinion.
I mean, one report that I've also seen, and is that a lot of these data center build outs, they are struggling to fill them with chips, right? So some Meta, for example, are saying that they've overcommitted into building out data centers and blah, 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 such that they are now trying to lease out cloud storage or things like that, right? Now lease out this infrastructure that they've made substantial investments in so that they can recoup some of that investment, because they are found out that they are not going to get value from it on their own. So, I mean, that is another thing to consider. Like you said, do your own research. Yeah. So to wrap up, we're just gonna wrap up with a story that broke last week.
Last week.
Last week. With, is it a hedge fund?
Yes, so it's a hedge fund called Situational Awareness, funded by this.
That guy was not situationally aware.
His name is Leopold, I think Aschenbrenner, if I got that pronunciation correct. The guy he was a former researcher at OpenAI. I heard got kicked out in 2024 because he wrote, this paper criticizing them and their methods. The paper is what they call situational awareness, and it goes viral in Silicon Valley, and it starts a fund based off of it. The claim is that AI is coming faster than most people realize, and you can basically draw the line between the early models and where the models are. And he was, assuming or predicting that AGI comes by like 2027. To get there, there's going to be lots of trillions, billions of dollars poured into compute, and he wants to have a piece of that pie. So all of his entire fund concentrated on AI stocks, and he got a ton of money coming in. He was doing phenomenally well.
Returns were remarkable.
Like, it was crazy. I think he started with, was it 200 million?
Yeah, $200 million, and he's grown into
like 45 billion at this peak in June,
that
or
is
something like that.
That is remarkable.
That's
More
why.
than remarkable.
And then last week, he got margin called because of leverage. Please, would you love to explain to our audience what that entails?
So basically, using leverage is borrowing money from a lender, maybe a bank. In his case, looking at the size of
a lot before.
Sorry,
you used to do
I used to do this a lot before. You know what's crazy? His leverage was what, 4x?
Yes.
I used to do like 20x leverage.
Wait, what?
I didn't know any better. That was before my MBA.
Yeah.
I did not know anything. But yeah, so you borrow money and someone's borrowing you money. So say you want to buy, say something is worth $10, right? Mm-hmm. And you have, I want to say you have $100, so you can only buy 10 of it.
Yes.
So using leverage in this case is like this guy. So 4x leverage is like, so you got an additional, is it $300 or $400? $300 to go with his. So now is not able to purchase $400 worth. What happens is if it goes up, right? So say the item goes from $10 to $20 and he's used the $400 to buy. Yeah. So his $400, basically his $100 becomes $800.
Yep.
And he only has to like return the amount that he borrowed. So that is it. The downside of it is that, there is a limit which is called like, is that a margin or like liquidity, whatever, so that it must not go down. So say the price reverses. So rather than going up, it goes down. Which is what happened in the case of Leopold. Right?
Yeah.
And that's what has happened in the stock market over the past few weeks or regarding his investments.
Absolutely.
So it got margin called. It's like, yo, this money that you borrowed, come and pay it now. Come and pay it now. So, and you have to source the money from somewhere, and you have to sell their assets on the cheap.
Yep.
In order to pay for it.
Absolutely.
So one thing that has been in the news is like his crown jewel of his portfolio,
Anthropic.
which is early investment in Anthropic,
You
is
know
one
that.
thing I held on to.
Yeah.
He released the letter to his investors, right? Basically highlighting what happened. And also, I think one thing that he noted is that they are up on the year still.
Yeah.
So on the year, so year to date, the fund is up. However, in the month of July, we're down, is it like about minus 400% or something? It's like mad. So that's basically it. Moral of the story is do not use leverage, or if you're going to use leverage, be smart about it. If his investments had gone the other way, I mean, the guy has been noted to be a whiz kid in the industry, someone that was respected.
Yeah.
Now, and I imagine has always been using margin for his trading. Now it has gone the reverse and everyone has turned him into a moral lesson.
Yep.
So one thing that I've seen regarding is AI and it's like AI and like moral of the story is like, what do they say? Anything that can stop isn't anything that can't go on forever will eventually stop or something. It is regarding they call it Stein's law. It's like anything that can't go on forever will eventually stop. And it sounds trivial, but it's like, when a lot of these companies are like, they are focusing in on growth. It's like, we're going to grow. Like, what happens when you have 99% of the market? What do you do? Right. So it plateaus, then you now start to freak out and make excuses to go into other industries. That's why AI is the frontier. That all the tech companies are like, we don't know the size of the market, but it's going to change everything. That's the sales pitch. We don't know the size of the market, but it's the future. AGI, it's blah blah blah. So that is the sales pitch. And I think with Leopold, the guy that used leverage, is like, what's that law that whatever can go wrong will go wrong?
Yes, everything can go wrong.
That is what happened to him. Hope he's learned his lesson. One thing that I've seen people that have used leverage to trade, and this is even myself as moral story, is that when you lose some money, you have the urge to double down. Like, I lost this much using Forex leverage. Maybe I should use 10 and I can recover it.
Back.
Hopefully it doesn't fall into that trap.
Yeah, I don't think he will. The people that give him money will not give him money if they will be observing his strategies going forward, I assume. So I think another thing that was very funny on Twitter or X now is that they were saying that because he sold all his public portfolio to Ken Griffin's Citadel, like in one block trade, like billions of dollars worth of public stocks. And there's a conspiracy theory that the reason why he got margin called was because a lot of investors there was a Fed meeting and they were expecting a rate hike, which didn't happen. Citadel, they claim that Citadel has, put out statements or media saying that will happen. They were the ones who eventually benefited. I was like, I don't know if that's true, but yeah, it's out there.
You have to respect to the game, right? Respect, right? And one thing that I heard is like the portfolio that you sold had already made, in a few days, made Citadel up to $1 billion. The next day, right? So because of the bounce back, made them up to $1 billion. So the finance and investing world, exciting as ever, but at the same time, you have to be curious because a lot can happen. It's just interesting.
I agree.
So I think that's what we have for you on today's episode of Chasing the Bag with Bade Biyi. We are back. Probably gonna do another episode next week. That's the aim. We need to do another episode next week. Bade.
Thank you guys. We always love, speaking about Chasing the Bag, and you guys should keep watching. Subscribe, like, share with your friends. We're back. Tell everybody. Bye.
Awesome. Thanks for listening.